You didn't get poorer, but somehow, buying a home feels impossible now. Mortgage rates are near 7%. Prices are still high. And the strangest part? This all starts thousands of miles away in the Middle East. To understand this, you need to understand something most people ignore: yield rates. When governments need money, they borrow it from investors. And the interest they pay, that's called a yield. Think of it like this: the higher the uncertainty, the higher the price of borrowing. But here's what most people don't see. When tensions rise in the Middle East, governments don't just watch, they spend a lot. Military operations, defense systems, global positioning, these cost billions, sometimes trillions. And when that happens, governments need more money, fast. So they borrow by issuing bonds to investors. Now here's a simple truth about money. The more risk you take, the more reward you demand. In peaceful times, investors accept lower returns. But in a world filled with war, inflation, uncertainty, lending money feels risky. So investors say, if I'm taking this risk, I need to be paid more. And that's exactly what pushes yields higher. Yields don't rise randomly. They rise when trust falls. And then comes the biggest trigger: oil. A huge portion of the world's oil flows through one narrow route, the Strait of Hormuz. If that supply is threatened, oil prices spike instantly. And when oil rises, everything becomes more expensive: transportation, food, electricity. This is how inflation spreads. And when inflation rises, investors demand even higher yields because their money is losing value. Here's where it hits you directly. Mortgage rates follow treasury yields. When yields go up, home loans become more expensive. The same house that once cost $1,500 a month now costs $2,500 or more. And this creates something called the lock-in effect. Millions of homeowners have 3% mortgages. If they move, they jump to 7%. So they don't sell. Supply drops. Prices stay high. And if you're trying to buy, you're stuck renting longer. But here's the hidden truth. Rent is not just an expense. It's a transfer of wealth. Your money builds someone else's future, not yours. Over time, this creates a divide. Those who own assets keep getting richer, and those trying to enter get locked out. This is how wealth gaps grow. Quietly, invisibly, but powerfully. So what should you actually watch? Not just home prices, not just mortgage rates. Watch three things: oil prices, treasury yields, and inflation. Because these decide whether homes become affordable or stay out of reach. The biggest financial changes don't start in your city. They start in global events you can't see. And by the time they reach you, it's already too late.